Hey everyone, welcome back to the Mark Loeffler Experience. Today we're going to go through the top 3 investments that the rich are using in today's environment to protect and to get more wealthy with inflation. Can't do a video without tea. Geez, that would be horrible. And just before we start, as always, this video is brought to you by Catano Loeffler Real Estate Services. If you're looking to buy a home, sell a home, or invest in real estate in southwestern Ontario or Alberta, multifamilies in Alberta, apartment buildings, then we are here to help. We all understand that we're in inflationary times. We have the highest inflation since the 1970s in Canada, just released at 7.7%. In the US, it's over 8%. We do know, because they've told us, and the Fed's already done it, they came out 3/4 of an interest rate hike earlier this week. Bank of Canada is probably going to do a 3/4 of an interest rate hike in July. They are going to be super aggressive trying to tackle inflation. They're going to try to kill the demand side of our economy right now. And what that will do will put us into a recession. So this video is going to talk to you about what to do now that we're in inflation and what I think is going to be successful. And again, this is just my opinion. This is not investment advice. This is just a guy on YouTube letting you know what he's doing out there in the world, okay? They are trying to put the brakes on, put the parachute behind us, drive into a headwind. Like, they are doing whatever they can to ratchet down inflation. Bar none, they're asking for extraordinary measures now. They're trying to shrink the money supply right now. That is what they are doing. And in my opinion, I think they're going to be successful because they are going to use a sledgehammer. They're not going to tap this anymore because, in my opinion, I think they were day late, $1 short. If they had started raising some of the interest rates last year to get ahead of these issues, then I think we wouldn't be in the same position. But they actually changed their mandate. We've talked about that before, so I'm not going to go into it huge, but to watch employment when they should really have just been watching inflation. So what are the 3 investments that we should be looking at right now? It may be 5, but really I want to focus on 3, okay? Number 1. Good old real estate. Good old cash flowing real estate. And why do I love real estate so much? I love real estate so much is because I have control over an asset. I can choose to improve that building, who my tenants are. I can choose what I do with that property for the most part. And where I'm investing in Alberta and in Ontario, there's 2 very, very different theses for my investments there. In Alberta is I think the economy is going to grow because oil, they just found lithium out there. Plus they're diversifying their economy. So I think real wages are going to grow even though they have one of the highest per capita incomes of all the provinces. And lower taxes out there and better landlord-tenant board. And why I'm investing in Ontario still is because I believe, rightly or wrongly, that government policies are constricting the supply of homes in Ontario and therefore restricting rental units and new builds. And when you do that, you create a supply issue, and I think there's going to be a supply issue in Ontario until there's the political will to actually fix the problem, and I don't think that's there. And that's just all I'm going to say. So I think we have a great opportunity. Do we have to be careful in today's market? 100%. We have to be very careful in today's market of what we're buying. And, making sure we're buying correctly and that we have, if we're adding value, how we're going to add value and what are we going to cash flow? That's really, if we cash flow on something, we can sustain any storm. Rents aren't going down in Ontario. Rents aren't going down right now in Alberta, although they do go up and down in Alberta. In Ontario, again, because of that supply constraint, I don't see rents going down. Recession, no recession, bar none, I think we're going to do okay here. And this is why people continue to invest in Ontario, even though prices are down 20% from the peak and interest rates are going up. That's why people continue to invest. So solid cash flowing real estate. Principal residence, but I would caution that turn your principal residence into cash flowing real estate. And if you can't buy where you live, rent and buy cash flowing real estate in other places. Go to Alberta. I mean, there's a lot of people investing in the US right now. I'm a little skeptical about the US right now. That's me personally. But do your research and figure it out. There's lots of places in the US where you can buy good cash flowing real estate for very, very cheap. You're not going to get any appreciation, but it's going to cash flow. And, there's lots of places where you can buy properties that you can't even build that property for what you're buying it for. Actually, comment down below, because I haven't made a BRRRR video in a while, like what a BRRRR is, buy, renovate, refinance, rent, sorry. Do you want me to go through some of the strategies again and then redo some of those videos that I did like 2 years ago when I started? Comment down below. Let me know. If we get enough votes, I will do it. If we get enough people say, hey, this one, I will go ahead and do that video again. Number 2. Here is the great secret of the wealthy. Debt. Yes, investing in debt. Even though your mortgage rate right now could be 4.39%, 4.4, 4.5, it doesn't matter. Inflation is 7 to 8%. And that's not even the real inflation. We all know the real inflation's higher, right? So if real inflation is higher and we're getting money at 4.3%, 4.4, 4, whatever, they're actually paying us to take that. It's why these huge companies, Amazon, Apple, Tesla, they didn't need to borrow money. Berkshire Hathaway has billions of dollars sitting there, but yet during the crisis, they went out and sold bonds to the tune of $50 billion because they understood that with all this money printing that happened in the US and Canada, that they can borrow money. They were borrowing money at 1%, 2%. And now that $1 that they borrowed, well, they're now paying back 92 cents on that same dollar. So now they can go out and invest that money, but they're paying back 92 cents. And obviously, if inflation gets worse before it gets better, which, I don't know if you really trust the government to contain this anytime soon, or if they even can, they're going to look more and more like geniuses. We had a 5%, we have 8, we have 9. Even if that comes back down to 5, that's a good 20% inflation that we've seen. So they're paying back 80 cents on the dollar for every dollar they borrowed. So I still, in this environment, debt is going to be your friend. That's why, I'm hoping to get about $250 million in debt in the next couple years. If all goes well. So comment down below, how much debt are you going to get into? And I'm not talking about buying cars. I'm not talking about buying personal assets, watches, all that. I'm talking about using debt to buy assets. Even if you had used it to buy something else, you still looked very, very smart in the last couple years. You looked smarter if you bought assets with it. Stocks. Because in an inflationary environment, then the prices of the stocks are going to go up. We are not seeing that right now because why? The stock market is an indication of futures, right? It's basically a futures market. So the stock market right now thinks we're going into a recession. And if they think we're going into a recession, they're going to drive stock prices down. Right. We got that. We understand that, right? So that is what is happening today. So is today a bargain? Could be. It definitely could be. There are companies out there that are probably a bargain. I'm not going to give you individual companies here, but there are probably companies out there that if you bought right now, long term, you will do very well with them. And how am I looking at those companies to know which ones are? I'm looking at free cash flow. I'm looking about how much money are they earning per share. And is that going to, and is number one, is it sustainable? Number two, is it recession proof? So recession proof and inflation proof. So can they raise their prices to cover for inflation? Are they going to still sell the same or more product in a recession? Personally, I don't think it's going to be long-lived because I think they're going to reinflate the economy. Well, we'll have to see when that happens, but it's not all companies are going to do super well in both that inflationary environment and the recessionary environment. So pick your companies very wisely. Stick with Warren and say, hey, Warren, who are the companies that are going to do well? So this is from Derek Foster, and he talks about buying stocks that people pay every day without thinking about it. So utilities, Bell. I would argue someone like Apple. People pay them every day without thinking about it. Amazon now. People pay them every day and they don't even think about it. They just, Amazon. The amount of people I know, and they're getting Amazon packages every day. I don't know what they're buying, but they get Amazon packages every day. What are those companies and those are not companies that I'm going to tell you to go buy right now. Those are just examples of people paying somebody every day, right? With the recurring revenue that they don't even think about. You don't think about the $2 or $3 you pay Apple for your storage or your music. You might think about the Amazon, but it might be just so ingrained. But you pay your phone bill every month. You pay your hydro bill, your gas bill every month. So there are very good companies out there that you can go look at their free cash flow and go pick out some winners. And there's two things I really haven't talked about. Early on in the pandemic, gold did do very well. It went above $2,000. But now everyone thinks that the recession is coming, so gold is really just stagnating. And I'm not a big fan of gold in general. It doesn't pay me a dividend. It doesn't pay me cash flow. I can't change anything about it. I'm not going to go turn, a gold bar into rings or whatever, right? Like, I can't do anything with it. Therefore, I'm not a big fan of gold. The other is Bitcoin. And Bitcoin is supposed to be a hedge against inflation. And again, they printed trillions and trillions of dollars over the last couple of years. There's actually 22% of the money supply today was printed in the last 2 years. So we've had money for we've had this currency for 100-something years. And 22% of all money out there in the world right now has been printed in the last 2 years. And now they're trying to ratchet that down and get some of that money back. And that's what they're doing. And they're going to be successful because they're going to use a sledgehammer. So Bitcoin ran huge in that environment because people bought real estate. They bought stocks. And then they said, I got money left. I'm going to buy Bitcoin. And it's down 66% from the peak, maybe 70% from the peak. It hasn't obviously adapted to a currency yet. You cannot really use it to buy everyday items every day. It is still coming to that. So Bitcoin or cryptocurrencies in a recessionary environment. So we're talking about inflation and recession here, right? How are we basically navigating this world? What are the rich doing? I think they are putting some assets into crypto. If you are a crypto fan, what I would do is I would take a monthly amount or a weekly amount and I would buy that amount weekly. And I would just keep buying it, but small. Like for myself, I'm like 1% to 2% of net worth that I would invest in this. But I would dabble at it monthly. I'm not a big fan of, hey, I'm watching the charts, I'm going to sell at the top of the charts, because I don't want to sit in front of a computer all day and try to figure any of that stuff out. I'm a long-term investor. I like to invest long-term. I like to pick good quality stocks or real estate or Bitcoin, for instance, or Ethereum that I think is going to do something over time, and I like to get in over time. So if you're going to, that's my investment strategy with it, because I'm going to average in. I don't really care if I do it weekly. Say I do it Wednesday at noon. I don't really care what the price is Wednesday at noon. I just go ahead and put my order in at market and I buy. So anyways, so you got 2 bonus ones that, well, maybe 1.5, because I think gold's probably a half bonus thing, but I don't think gold, with the inflationary environment we have going on now, going into a recessionary environment, is going to do well. That's all I got for you guys all today. So again, thanks everybody for watching. Comment down below. Let me know what else you're investing in. You might be sitting on hordes of cash right now, but it's kind of hard to sit on hordes of cash when it's an 8% inflationary environment. At least lend that money out to somebody at 12 to 15%. Anyways, guys, thanks so much. We'll catch you next time. Have a great Thursday.